Article 36. Value of supply and deemed supply for related parties. This article establishes special valuation rules that apply when goods or services are supplied between related parties. These rules override the general valuation rules set out in Article 34, which covers the regular value of supply for taxable supplies. Article 35, which covers the value of imported goods. Article 37, which covers the value of deemed supplies. The reason for these special rules is to prevent tax avoidance and ensure that supplies between related parties reflect a fair market value, especially when there is a risk that the tax base could be artificially reduced. 1. When Article 36 applies special valuation rule. The special valuation rule, market value adjustment, applies only if both of the following conditions are met. Condition 1. Supply below market value. The first condition is that the value assigned to the supply between the related parties is lower than the market value of the goods or services being supplied. This means that if the supplier charges a price lower than what would typically be charged between independent parties acting at arm's length, this rule is triggered. Condition 2. Limited right to recover input tax. The second condition is that the supply is a taxable supply, but the recipient of the goods or services does not have the right to recover the full VAT charged on the supply as input tax. This can occur in cases such as the recipient is engaged in exempt activities, meaning they are not entitled to reclaim all input VAT. The recipient is a non-taxable person, such as an individual consumer or a non-registered entity. The recipient has partial input tax recovery due to their involvement in mixed supplies, both taxable and exempt. 2. Market value substitution rule. If both conditions mentioned above are satisfied, then the value of the supply will not be based on the agreed price between the parties. Instead, the value of the supply, or import, will be deemed to be equal to the full market value of the goods or services. This ensures that the tax base reflects an objective, fair value, rather than an artificially low price that could reduce the VAT liability. 3. Application to imports and deemed supplies. This rule applies not only to regular taxable supplies but also to imports of goods and services between related parties. Deemed supplies, where goods or services are treated as supplied for VAT purposes even if no actual sale took place, for example, internal use of company assets. 4. Key terms defined. Related parties, as defined in VAT legislation, related parties are persons or entities who are affiliated through ownership, control, or family relationships. Examples include parent companies and subsidiaries, companies under common control, individuals and businesses controlled by those individuals. Market value. This refers to the price that would be charged between two independent parties, each acting in their own best commercial interest and dealing at arm's length, without influence from special relationships. 5. Rationale and policy objective. This rule exists to prevent undervaluation between related parties, which could otherwise be used to shift profits, reduce taxable revenue, gain unfair tax advantages. By requiring the market value to be used in these cases, the law ensures that VAT revenue is protected and transactions between related parties are treated the same way as transactions between independent parties. For more details, contact us.